Hello everyone, Jane Galena here, also known as Airplane Jane. If you have not already, like and subscribe to my channel, please go ahead and subscribe and turn on the notifications so you guys get when I go live and also upload cool videos like this one. All right, so today we are going to be talking about moving averages, simple and exponential, and how you can use them in trading, and I'll show you a couple of key examples that people use on all different time frames. So let's go ahead and get into it. All right, so we got our slideshow here. So we do have the moving averages of simple and exponential. Now again, if you guys are new to following me, I am also on Twitter, Instagram, LinkedIn, Facebook. I have my website, cjanetrade.com. I'm also on Ticker Talker, and you guys are always able to reach me at cjanetrade.com. All right? Jane at cjanetrade.com. So if you guys want to learn more than just these free trading videos on YouTube, come on over and join me in the training pit. It's really a online trading room that's accessible 24 hours. We give over 35 different webinars a month, and you get to learn all about trading around the dark pool as well as how to trade. It is still somewhat fairly basic, but for people that are looking to reboot around the dark pool or for new traders, it is the perfect place to go. All right, the little legal disclaimer that all the videos here seen about trading on my YouTube channel are for educational purposes. There are varying degrees of risks in trading all securities instruments, so please do your due diligence and know that no past performance is indicative of future performance. All right, now that that's out of the way, the moving averages that are used on the charts are really a mathematical breakdown of the price to see the average price movement. We do have two crucial ones. So we have the simple moving average and the exponential moving average. There are others as well that people configure, but these are the two major ones that people are going to be using on charts. So let's break them down. So the simple moving average is going to be that. It's simply the equation right here. So we have the price from different days, and it's divided by the number. So it could be the opening price. Usually it's going to be the closing price that is used. And when you are using your settings on the simple moving average, you could check it out and you can see whether it's the open or the close, but most of the time it's going to be the close that is used. And you're going to divide it by the N. The N is going to be the number of time periods. So if you're on a daily chart and you have 21, which would be 3 weeks, right? Actually, 21 would be roughly 1 month trading because we have roughly 21 trading days in a month. Then you would see that that is the average price over that time frame. And it will move daily because every time it's looking back at those past moving days of the prices. So the smaller the period, the closer that the average will be to that price. For example, if you had a 2 simple moving average, it's going to be average of the past 2 days. If you have 200, it's going to be the price added up of the 200, and it'll be a much slower moving average. If you have that low number, such as a 9 simple moving average or a 5 simple moving average, you'll see it's really going to hug those candles, and it's going to go very, very close to the price action. The second one that we have is the exponential moving average. So the exponential moving average tends to be smoothed out a little bit more because of the exponential moving average formula, right? So we have the price today times the smoothing over 1 plus the number of days for that moving average, plus the EMA from the day prior. And the exponential moving average will allow it to be a little bit more smoothed out than the simple moving average. So let's check it out a little bit more. The two major SMAs that you tend to see are a 200 simple moving average. I grabbed one that had EMA, but same thing. 250 are going to be the simple moving averages that many people are going to look at. So this would be like a 50 simple moving average and a 200, right? And many people that believe that, especially on a daily chart, that these are going to indicate the direction of the trend overall. You can use them on smaller time frames for sure, and many times algorithms are written to buy or sell off of these simple moving averages, so it can help to have them on your chart as a target for support or for a target of exit. All right. Now, we have the golden cross. That's when the 50-day moving average or 50 simple moving average on a daily chart crosses above, it's crossing up the 200 simple moving average. So that could indicate that we are in a bullish trend for that particular stock ticker. On the flip side, we can have the death cross. That is going to be when we have the 200 simple moving average, which you'll see tends to be a little bit more smoothed out, or it moves more slowly. And that lower one, the 50 simple moving average, is going to be closer to the price action. Now, when that 50 simple moving average starts to curl down and it crosses down over that 200 simple moving average, that can indicate a bearish move or bearish trend for that particular ticker. So let's go ahead and look at a couple charts. So I happen to have Bed Bath & Beyond daily right here, right? And I only have my simple moving averages on right now. And for me, I have my 200 simple moving average right here as this light green color. You can see that it tends to be much more slow to move because it has 200 days of average. You can see how it acted as resistance right here one time, resistance again, and then once all those sellers were gone at the 200, look, it came up and it bounced above it. And then it came down and look at where it stopped. It happened to stop right here, and this is our 50 simple moving average, right? So our 50 simple moving average acted as support. Maybe there was an algorithm or investors that say, hey, I want to buy when it comes down to that 50 simple moving average, and it holds it as support, right? So you can also see that right here, right here, we have the golden cross, right? This is the 50 simple moving average crossing above the 200 simple moving average. Now, not shortly later, right, it comes up, price action starts to drop down. But if you'd gotten in when it was crossing the golden cross as a potential strategy, I'm not saying just use this strategy, look at the volume, look at all other things, but you could start looking at charts and hey, maybe that would be your strategy, right? You want to buy when that golden cross happens. Well, if you bought on that day, even at close, say you got in at the close here, which was 1481, and you wrote it all the way up here, you would have still made $3 or roughly 20% on BBBY, Bed Bath & Beyond. Now, maybe you want to go on the short strategy. You say, Jane, I love that. That's a great one. That's easy, but I hear you can make more money when you short stocks going down. Well, maybe you want to look for those death cross. BBBY also has one of those, right? And it happens, you grab it right here, right? You can see that we have the 50 simple moving average that is curling down over the 200. So it could indicate, hey, there's going to be that bearish move that's coming. So maybe you get in the next day as it closes, or even the close of that day. No, that next day at that close, hey, look, it actually bounced up, and that close was 572. You could have written it down to the low down here. Perchance. You're never going to hit the high or the low of a move. So just remember that. Get the most of the trend. It's going to be the best profit. Don't try to peg the top and don't try to peg the bottom. Maybe you get out on the next day when it comes up here. So you go to $4, right? Well, you've still locked in $1.70 out of that $5, or you've made 30% to the downside on that potential strategy. As you can see, we've got the closer moving averages, right? This orange one is the 20 simple moving average. So maybe you want to even play around, practice on paper. You guys have seen my paper trading video for sure. And practice on paper. Hey, maybe I want to start shorting and see anytime a stock goes below the 20 simple moving average. You know, practice it on paper first. If you're developing a new strategy, please practice on paper. Maybe you want to take it from the 20 to the 50. Okay, on this one, you would have made potentially a $13.80 down to $12.30, $1.50, 10%. Hey, maybe you do it again. It went down, it bounced up above, and then it crossed below. Okay, you get in at $15.77. comes down here at $14.11, $1.60, another 10%. So you can see there's different strategies, and that's the beauty of the market. Is there's so many ways to make money in this market, but the best thing is paper trade and determine what strategy works for you. All right, guys, I hope you love this video on moving averages. If you guys have anything else you'd like me to answer in a video, shoot it to me at jane@cjanetrade.com or put it in the comments below. I'm happy to help you guys along in your trading journey. There's nothing better than hearing success stories of how I've helped people to become prosperous traders. All right, have a great day, and carpe profit, seize those profits one trade at a time.